Is Bitcoin going to drop under $30,000? Well, today we are doing a Bitcoin emergency update because we know it's the big brother. If it moves, everything else moves more extremely in the same direction, and we need to be aware of that. So we're going to look at some particular technicals that are unfolding that we do need to be aware of. So if you like today's content, like, subscribe, hit the bell notification. If you don't know me by now, my name is Jiggy. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. Been featured in the best-selling book, High Probability Trading Strategies, back in 2008, where I only used to focus on currencies, but now exclusive on cryptocurrency. So let's dive straight in. All right, so we've got a macro viewpoint of Bitcoin. This is my macro viewpoint of Bitcoin. We're going through this very big since April last year. A, B, C correction. What we're seeing it as, this looked like a potential end of the correction. And what we were looking for was a 5-wave sequence to the upside. But we need to see if that wave count gets invalidated, then we have to relook. And the way I look at charts is almost like a human being, and we're doing psychoanalysis on it. How is it feeling right now? But really, it's all about the mass herd psychology. And if it unfolds this way, then this is what we should anticipate. But if something happens that we're not anticipating, then we need to review the market. So I've got an Elliott Wave and Fibonacci course, and you can take my free Elliott Wave and Fibonacci Masterclass. It kind of teaches you the high level, but there's a few things in the foundation. It's Elliott Wave broken down to foundation, intermediate, advanced. So in the intermediate section, there's lesson 5 where it says the 3 Elliott Wave rules. I'm just going to jump into that lesson. By the way, we've got a massive discount for this course. It's what is it? It's normally $997, and currently it's £97 for the full course. And you'll get an invite to my private Telegram, which just teach you how to read the markets, especially for situations like this. So let me just zoom into this lesson, and we'll see here. These are just standard Elliott Wave and Fibonacci rules, and we need to be very aware of these. These are important because it helps us read the psychology. It was decades and decades and decades of work from Ralph Nelson Elliott and others that came after him that really worked this stuff out. So wave, what we want is rule number 3. Wave 4 cannot trade into the range of wave 1, closing range. So this is wave 4. If we're anticipating a wave 4 and then a wave 5, it's only valid if this wave 4 does not trade into the range of the previous wave 1 high, right? That's the range. That's what we mean by this rule. That's why it's very objective, mechanical, and if the wave count gets invalidated, we need to review. We need to step back and go, oh, maybe it's not a new 5-wave impulse to the upside. Bitcoin's not quite there yet. It's going for a bit of more, a different type of psychology. So then the whole mass herd psychology is going to cause a different type of buying and selling behavior. And that's what we're looking at in a mechanical, objective manner. So now if we jump back into Bitcoin, let me just let me pause this guy. And let me just get rid of that line. Here we go. Bang. Okay, cool. Okay, here we go. Then we go Bitcoin over here. So now what we're going to do, we're just going to zoom into the recent data. So I've just taken a data back to a couple of days up until 2-3 days ago, because at this point, the high probability with the weekly momentum being up and the daily momentum being oversold and up was, and again, we can only do probabilities, never certainties, it was looking like a 5-wave sequence. Like we can see this here, looking like we got this wave 1, 2, 3, an A, B, C over 4. And then if it holds, then we're anticipating new highs into the $50,000 range. But we also said what will invalidate this wave count? Well, it's exactly what we just said in that lesson. It's if rule number 3 is invalidated. And again, I just want to emphasize this because, when I say probabilities, never certainties, it means that. It means we cannot be certain. So if any of these rules are violated, the wave structure as labeled is incorrect and must be reevaluated. That's why we have stop losses. That's why we have risk management, is to say, look, this is what the high probability setup is, but just because it's a high probability doesn't mean it's a guarantee. Very important distinction. So when we're now looking at this, and let me just get rid of this, so it's just a bit easier for us to see, is we want to be really aware of this range here, right? I'm just going to make it even thicker so we can really emphasize it. Let's make it dashed so it's really clear for us to see. So if this range does not trade into this range, then it's more than likely going to hit up. But as of now, keep in mind, we want the close below the wave one, as in if it's to invalidate the wave count, it's a closing range. So the price closes, finishes here, and then that invalidates the wave count. Then we need to review. And that's what we're going to talk about today. Because as of this morning, the market has been, it was holding, and then bang. Now we're trading in the range of wave one as I'm recording this video right now here. If it finishes and closes in this range, what do you mean by finishes and closes? So I'm going to use something called candles. And you'll see with candles, every bar on this particular chart represents one day. You have the body of the candle, which is the open, the high, and the close. When it's green, and the red is the reverse. Red means the open was at the top and the close is at the bottom. But you have these lines, and these are called wicks. That's the trading range of the day, but it means that you can see the price go down, then come back up and close back up here. Meaning that we didn't have a close down here, we just had the range down here. So again, if we get a wick down here and it closes above, then the wave 4 is still fine to hold, but it's still, it's on tender hooks right now. But if it closes here, we need to reevaluate. So what we're going to do now is we're going to make the assumption. The move that we don't want is if it closes here. But if it does, we need to be objective, mechanical, and say, what does that mean for the market? What does it mean for medium term, short term with the market itself? So now let's assume, again, this is 9 a.m. UK time when I'm filming this. So we want to wait for the bar to close, and it hasn't closed yet. Let's now zoom back out. And what I'm going to do is I'm going to get rid of this wave count, because if it holds like this, it's going to invalidate that wave 4 low. And then we want to really look at what is this wave structured in. So if we just zoom back out like this, let's go back to our line chart. It's just easier and cleaner for us to see. If this has been invalidated, well, what does it look like? All right, well then to me, what this looks like over here, again, I'm going to be zooming in and out just to kind of emphasize a couple of things. Let me zoom in and out. This then looks like some type of A, B, C correction on a micro count. And then when you get an ABC correction, you should have a continuation making a new low, right? That's really, really important. Now, there isn't a very obvious wave count on this wave C structure here. But there's not an obvious wave count. It's not really clean. We can make a few kind of, but what would be clean is if this is an ABC here, and we do make a new low, then this part here would be a wave 3, this would be a wave 4, and a wave 5. So we can use that information to help us say, okay, if it does make a new low, what would be the potential high probability end of still a potential wave C of a wave 4, because this count still holds. So now we're looking at, if we do get that closing range, what's likely to occur next. It's not what I wanted, but this is the whole art and the science of trading. And remember, take my free Elliott and Fibonacci Masterclass, which goes over this in high level. If you like the content, you can buy my course. It's £97. You get an invite to my private Telegram. We do weekend workshops. We do extra bonus stuff, especially with updates like this, because this can really impact the market, especially if you're involved in lower caps, even the higher caps. This would scare the market. A lot of fear, a lot of uncertainty, a lot of doubt. Just from a purely technical standpoint. So now let's just do some price targets. Worst case scenario. If this is that, what would be the typical? So one great indicator is the Fibonacci external retracement. You just measure the wave 3, what we're calling a wave 3 end, and a potential wave 4 top. And again, let me just draw it in like this. I'm just going to draw it in like this. So we're just on the same page. I don't want to get too anal with the other counts. And then this one here might be a potential wave 4 of some sort, which means we should expect a lower low. So there's a few ratios. A typical wave 4 low is in this range over here. And then there's another ratio that we want to be aware of, which is the end of a wave 5. This is an external retracement where we measure the beginning of the wave, end of wave 3, top of wave 4. And there's actually three ratios that we want to be aware of for our end of wave 5. Is 38, 62, and 100%. They're the main three. And what we're looking for is a cluster. So the 100 is really, really unlikely because it's really outside of that range. But this 38 and 62, we want to be aware of these two ranges. And even with this, we find Bitcoin is more emotional than traditional markets, and crypto as a whole is more emotional. So let's just be aware of these numbers over here. So we've got this range here, and we've got this range down here. So the highest ratio, as in the number, is around 32,000, and the low of this range is around 29,000, and then this lower range of 68.2% is it's around the 24,000 mark, right? Which is really extremely low, really, really extremely low. Is it likely to occur? So when I'm looking at this macro picture, again, what we're looking at is if this 2017 is a wave one, is what I'm calling a wave one. I'm just going to move myself to the left over here. If this 2017 is a wave one over here, then we should not see this range exceeded, right? So we got this, what looks like an A, B, C happening. And if it ends up in a wave four, this is what will invalidate the wave four, this line over here. So we should anticipate over here or over here if it closes. Now, there's a couple of things we also want to keep into account. If I jump into my top left chart, which is my weekly, we'll look at the momentum is still bullish, right? The momentum is still bullish on, let me just pull up the two main indicators. Yeah, the 13 is bullish and the 8 is overbought. So we might be getting that reversal as well. So they're not both totally pointing in the same direction. So we want to be aware of that. And then on the daily momentum, again, let's just take the 2. Let's just focus on the 13. And right now, it is bearish. So on the next bullish reversal, it's a sensitive time right now. This next couple of days is gonna impact the next 3 weeks, 2-3 weeks. And again, if this holds down here, geez, it could just take a fall, which just is what it is, right? This is the whole point of technical analysis, where I know we've got bias. Like if you're in low caps, we want Bitcoin to be going that way because that's healthy for the entire market. But it's probabilities, never certainty. So this and this is likely going to hit this range if this low holds. Is not the news I want to be delivering, to be honest. But it is what it is. All right, let me just make sure that's in play. Let me get rid of this. So is there anything else I want to cover? I'm just looking at this. Yeah, this is the range that we need to be aware of. But on a more positive note, when I'm looking at this, again, the wave count of a wave 3, a wave A, B, C of a 4, even if it's here and here, still holds. So it means the thesis for a 6-figure Bitcoin still holds, which is all-time new highs being made at some point in 2022. But this is one of the reasons why, only risk what you can afford to lose. There's no certainty in this game, and it can just switch like that even when it's looking healthy. Bam, it goes lower than anticipated. There's more selling than we anticipated, and then the markets could just come down. So what's the price right now? Right now it's 38,000. So we could get another, 10, 20, 30% drop to this next range. And again, if it does go, when it's spiked above here, and if it spikes beneath this wave A extreme, what we're calling a wave A, and makes a low down in this region, then that's called an irregular ABC. But again, we need to see some follow through on the upside. Everything still holds. It's just that these next 2, 3, 4 weeks, if we do get a lower low, are going to be uncomfortable. They're going to be uncomfortable because you would have experienced it here, you would have experienced it massively here. Yeah, and it's just the nature of the game that we're in. So with Bitcoin, on a psychological buying and selling behavior perspective, we have, if we close in the range of the of the wave one, what we was calling a wave one, this high over here. If it closes in this range, it's not closed yet because the day is still open. It could end up being a wick and then closing back up here. We can keep our fingers crossed, but it's out of our hands. You see this wick, over here. All right, well, if the price goes back up to here, then the wick will be like this and it will close up here. And that's healthier, but it's still quite an extreme wave four. But if we're going to get like a reversal and this low is going to hold, we need to have some follow through, which is totally out of our control because there's millions and millions of players in this game with billions of dollars of volume of buying and selling behavior. And that we got no control over that. So it is what it is. I'm just thinking, is there anything else that I wanted to? Yeah, it's just know that when Bitcoin moves up in this angle, let me draw it like this. Actually, I'm just going to draw it on a clean part of the chart. I'm just going to draw it like this. When Bitcoin moves like this, the other coins tend to move much more extremely, like the angle, the percentage gains. And when Bitcoin moves like this, 20-30%, it just panics the market. It panics the market, and the others just move. The altcoins move like this, right? And we want to be aware of that. So we're looking for, if you're buying, we're looking for when Bitcoin is a macro indicator looking like this, we're looking like this, and we want to be defensive. When it's looking like this, which we might get, like this, others will panic sell, and that tends to happen. So money leaves the market. But then sometimes this is required before we see that reversal. So take my free Elliott Fibonacci Masterclass, mainly because it'll just give you a scope that is method to this madness. It's not random stuff happening. And then, buy my course. It's £97. It's cheap as chips. We made it really, really cheap, especially during this time, because it's important that you know that this behavior happens. And there's, we just read the market. You can tell I'm wearing green today. I've got a green screen behind me and I'm going invisible. Now you know what that stands for. So let's finish on a quote today, and it's relevant. It's really relevant. Let's read. It's from Mr. Michael Jordan. Mr. Michael Jordan. I've missed more than 9,000 shots in my career. I've lost almost 300 games. 26 times I've been trusted to take the game-winning shot and missed. I've failed over and over and over again in my life, and that is why I succeed. So with this game of probabilities and never certainties, it means you're going to take losses, and there's going to be drawdowns, there's going to be ups and downs, and the lower the cap, like the market cap, the younger the project, the more volatile it's going to be, and the larger the project, the less volatile it's going to be. But our cryptocurrency as a whole is a very young infant category. It's only been around since 2009, and the $18 billion total market cap from the early 2017, and now we're in like $2 trillion, and we've been to as high as $3 trillion. It's still very young, so just be prepared that we might go for a bit of a storm over the next few weeks. But again, we'll keep a close eye on it. But again, if it closes below that low, is it likely? Hey, look, let's just wait for the information. Let's see what it's looking like tomorrow. If it does close, we just need to reevaluate and then look at what we need to prepare for, and just prepare yourself for just what likely happens is the market drops, and sometimes it can drop quite fast. So just be really aware of that. But also it can flip. So we'll just wait for that closing. So like, subscribe, hit the bell notification. You can tell, right? Because this is one of the challenges with technical analysis is if you've got bias, right? We've got bias. If you're in crypto and you're looking for the whole market to go up, or you want Bitcoin to go up, but then we need to have the ability to be totally objective. Can we be 100% objective? Ignore our bias and just go, what is that pattern looking like? And it looks like an ABC. If we do close like we just saw in that range, that would be the first indication of that confirmation. And then we'll probably get a lower low of that initial, what we're calling a wave C. And then if it unfolds into a mini 5-wave sequence, we can kind of peg it a little closer, because the psychology tends to play out one way or the other. And we just want to be like a therapist, and we're just reading the person. The person here is Bitcoin. How is it feeling right now? And it's feeling pessimistic, which means there's fear, which means the market price will tend to go down. And there's particular ratios that will go down to, like the extremes. And then there tends to be a reversal, and we want to be prepared for that reversal, because if that reversal occurs, then we know that there's going to be likely to be all-time new highs. So like, subscribe, hit the bell notification. I'm going to do more and more updates like this, especially in these sensitive times with Bitcoin, because this is really, really important, because otherwise it just looks like it's random behavior happening, but there is method behind the madness. All right, see you very soon.